Ladies and gentlemen, good day and welcome to the investor call of Cosmo First Limited to discuss the Q1 FY25 results. Today we have with us from the management, Group CEO Mr. Pankaj Poddar and CFO Mr. Neeraj Jain. Starting off with the statutory declaration, certain statements and the content forward-looking. These statements are based on management's current expectations and are subject to uncertainties and changes in circumstances. These statements are not the guarantees of future results. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation comes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. Now, may I request Mr. Neeraj Jain to take us through opening remarks, subsequent to which we can open the floor for Q&A. Thank you, and over to you, Neeraj Jain.
Well, thank you. Very good afternoon, ladies and gentlemen. I am Neeraj Jain, Group CFO at Cosmo First, along with my colleague, Mr. Pankaj Poddar, Group CEO at Cosmo First. Our financial results for Q1 FY25 and investors' presentations are available on company's website. We'll first discuss a brief on the performance of the company for the June 24 quarter, which may be followed by questions. Starting with the financial results, consolidated sales for the June 24 quarter is 690 crore rupees, which is about 5% higher compared to last year June 23 quarter. This is backed largely by the higher volume and better margins. EBITDA for the quarter is 84 crore rupees compared to 55 crore rupees in June 23 quarter. The improvement in EBITDA is mainly backed by higher specialty sales as well as improved domestic BOPP film margins due to better demand. The company has reached specialty sales of 69% of total volume in Q1 FY25 as against 64% in FY24. The specialty margins have also increased in Q1 FY25 due to better sales mix as supply has started again to a specialty export customer for a specialty high margin specialty sales. This was not there in FY24. BOPP film margins have been running at 19 rupee per kg during June 24 quarter as against 12 rupee per kg in March 24 quarter and 11 rupee per kg in June 23 quarter. BOPET business, which was started in September 2022, which is close to 4% of company's consolidated sales for Q1, has also earned positive EBITDA for the first time since it started the operations. It may be noted that if we separate the new verticals, means the BOPET vertical, specialty chemicals, pet care and rigid packaging, the BOPP film EBITDA stand at 13.4% for the Q1 as compared to reported EBITDA of 12.2%. Moving to outlook for the year, the company is expecting improved sales of specialty film as well as domestic margins are expected to remain healthier level at FY25. Cost rationalization on renewable power has started during mid of the first quarter of FY25. We expect annual bottom line impact to be close to 25 crore from the same. Another cost rationalization initiative on shifting of Korea plant to India is moving as per plan. Post relocation, the production line should get operational by Q3 of FY25. This will facilitate cost optimization of close to $1 million and improved capacity utilization of the line. Moving to specialty chemicals. The specialty chemical has commercialized multiple chemistries, including adhesives, coatings, and master batches, which should facilitate improvement in EBITDA and better return on capital employed during FY25. The subsidiary is now, EBITDA of the subsidiary is now stabilized in mid-teens and should deliver more than 25% ROCE in FY25. Moving to packaging growth projects. We started rigid packaging vertical under brand name Plastic during second half of FY24, which is related to packaging industry. The business vertical is growing well, and with addition of injection molding, it's working fine which has started from the quarter 1 of FY25. Work on CPP and BOPP lines are progressing as per plan. We are expecting CPP line to start commercial production by quarter 3 of FY25, and BOPP line is expected to start commercial production by first half of FY26. As indicated in past as well, both the lines will be world's largest production capacity lines and will increase company's production capacity by close to 50% in a phased manner. With high-speed, large width lines, it will rationalize cost of production by 3 to 5% depending on product. Moving to pet care vertical Wrigley. In Wrigley, we are focusing on consolidation during the first 2 quarters of FY25 before next level of growth. We shall be focused on same-store sales growth within the first 2 quarters. Moving to growth and net debt position, the company is looking for close to 300 to 350 crore rupee of capex in next 12 months, which is mainly related to BOPP line and some projects to enhance specialty sales. Financial remains strong. The company's net debt is 598 crore, which is close to 2 times to EBITDA and 0.4 times to equity. We expect net debt reduction after FY25. With this, I will take a pause and would like to open the call for questions, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for the moment while the question queue assembles. The first question is from the line of Abhishek Jain from Orient Capital Markets. Please go ahead.
Hello, sir. Congratulations on the good set of results and your future plans. I had 2 questions, mainly related to the BOPP margins, contribution margins, and the realization for this quarter, the previous quarter, and how it has been for July and August.
As indicated, it's broadly working fine. Margins are running broadly fine.
My question is for the BOPP and BOPET margins, sir. And the realizations.
Margins are working fine.
Can I get the number, sir?
The post June, actually, it will be difficult to give the specific number, but the margins are little upward direction.
And the realizations?
Realizations as well.
Okay, so no specific number?
The post June, it will be difficult actually.
Post June and before that, for the previous quarter?
So as we indicated, 19 rupees per kg was the BOPP margin during the June quarter, which is looking little upward post June. That's all I can can be shared at this moment.
Okay, thanks.
Thank you. A reminder to all participants, you may press star and one to ask question. The next question is from the line of Shashwant from Augmenta Asset Managers. Please go ahead.
Hi, sir. Congratulations on the numbers. I just wanted to ask, do we have any update on the Windows Sunfence capacity that we were planning?
Sorry, could you please repeat your question?
Yeah. I just wanted to know if we have any update on the Windows Sunfence capacity that we were planning.
So part of the capacity, we expect to start commercial production from the quarter 4 of FY25. Currently, we are at different stages of trials for the different product categories, which is working fairly well. At the same time, parallelly, we are also developing distribution network in India and overseas for the product to be launched. I expect the product to start commercial production by the quarter 4.
And sir, is this going to be primarily catering for the domestic market, the import substitution side, or for the overseas one?
So we'll do, of course, both. It will be domestic as well as exports.
And sir, as you mentioned in your opening remarks regarding the BOPP capacity coming in for the next fiscal, so can you share any flavor on the margin impact from the demand-supply scenario or anything on that side?
So of course, for the FY25, as we indicated at the beginning of the call, we feel margins will remain healthier, both for the BOPP more particularly, and our line is expected at the beginning of the next financial year.
Okay. Thank you.
Thank you. A reminder to all participants, you may press star and one to ask question. The next question is from the line of Sarvesh Gupta from Maximum Capital. Please go ahead.
Sir, good afternoon, sir.
Oh, sorry, sir, you're not audible.
Hello?
Yeah.
Yeah, so my question is that in this quarter, we have seen this specialty mix improving from 66% to 69%, and you are saying that 12 rupees in commodity has increased to 19 rupees. So despite that, the gross profit, if I look at versus last quarter, has only increased by 30 odd crores, when you are saying that the spread has actually gone up by 50%. So can you just explain? I can't understand how these numbers are, happening despite 50% increase in the commodity margins.
So commodity margin, as we said, has increased by 7 rupees on an average if you look at in quarter 1 compared to previous quarter, 19 rupees versus the 12 rupees as we indicated. Based on company's current volume of commodity part of the business, I think 30 crore rupee increase in the gross margin, largely due to specialty increase and commodity margin increase, is fully justified.
Okay. And second, sir, this 19 rupees, is it the exit sort of a run rate, or is it the average that you have achieved during the previous quarter? And what would be your exit sort of let's say in the month of June, what was that number?
This is average, of course. Well, in terms of the exit, you see, we see this largely from the value add perspective. So quarter 1 average value add on a base commodity film was running close to 32 rupees, which was closer to 35-36 rupees at the exit point.
Understood, sir. And regarding, sir, your other lines of business, now more or less they are all sort of subscale. So any business which can provide you some sort of a reasonable EBITDA in this year itself amongst the specialty chemicals or the rigid packaging, or what is their target for this year?
So besides the film business, of course, the specialty chemical is making already decent EBITDA. Other businesses are also growing. You will appreciate that, most of these businesses we launched very recently. So with some time we expect all the businesses to make money. So specialty chemical is already making money mid-teens EBITDA level. Other than this rigid packaging, by the end of the FY25, we expect to start earning money.
Understood, sir. Thank you and all the best.
Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Aditya Rathi from Equitas Investment. Please go ahead.
Thank you for the opportunity and congratulations, sir, for good sets of numbers. Sir, I wanted to gauge more understanding about the Korea shifting that we are doing, which you said that will start by Q3 of the current financial year.
So that was one line, actually thermal film line actually, which we were running at the Korea. We moved that line to India operations, more so for the cost rationalization, but besides this we thought we would be able to better optimize the utilization of this line if we run it from the India. So this we already relocated. In Q2 we expect various trials to be completed, and from Q3 we expect commercial production to start for this line.
Sir, any outlook on the top line and bottom line from this?
So this is a more a value-add line actually. As I said, this thermal film production line, which do a value-add on the plain vanilla BOPP film. So from that perspective, the top line may increase only because it's a specialty product compared to the commodity product, but not very significantly because the volume of this line is expected to be between 6,000 to 7,000 metric tons annually.
Okay. That's it from my end, sir. Thank you so much, sir.
Thank you. The next question is from the line of Mukesh Panchwani from WC Securities. Please go ahead.
Yeah. Hi, sir. Am I audible?
Yes, you are.
Yeah. Sir, I want to know that in the last quarter, did we get the benefit of BOPP price increase in the entire quarter or for a month or so?
So BOPP price was increasing during previous quarter in phases each month. Average, as we indicated, gross margin was 19 rupee compared to 12 rupee in previous quarter.
Okay. And sir, how much increase in profit is contributed by increase in specialty film ratio, and how much it would be contributed by BOPP price increase?
Well, it will be a little difficult to quantify on the call, but very broadly I can indicate a large part of this is because of the specialty increase. And this could be 60-40 ratio, but at a very ballpark number. It's difficult to quantify specifically.
Got it. And how do we see the ratio of specialty films in this current year going ahead?
Specialty film is working fairly fine, so the increase momentum continued and rather should be more progressive in nature in the Q2.
Okay. Thank you, sir. That's all from my side. Thank you.
Thank you. The next question is from the line of Bhavesh John from Aditya Birla. Please go ahead.
Hi, sir. Sir, in terms of for specialty, what is the contribution that we see by the end of FY25 and FY26, if I may ask?
So, in quarter one, we already reached in volume term at 69%. We expect this to further increase in the coming quarters. There are a lot of product categories where we are working. A lot of new products also we are expecting to be launched in the coming quarter. So, we are optimistic to further increase the specialty sales.
Okay. And for Wrigley, so we are looking to consolidate 2 quarters. So are we kind of looking at making it profitable, or profits will take time to come?
Need to repeat your questions, please.
For Wrigley, when can we expect it to become profitable in terms of, let's say, EBITDA level, break-even, and then profitable?
So Wrigley, the nature of business is it's currently at the growth phase. So it's very difficult to quantify by what time it will become profitable. Each quarter we are progressing in line with the plan. So as we said, in the first 2 quarters of current financial year, we'll focus more on the consolidation in Wrigley, little more on the cost optimization, and same store sales growth. And post that, in the second half of the financial year, we will look at the next level of the growth. So as of now, little difficult to quantify by what time it will be profitable, but we are progressing day by day in that direction.
Okay, sir. Thanks a lot, and all the best.
Thank you. The next question is from the line of Ayush Vimal from Clearview Capital. Please go ahead.
Thanks for giving me the opportunity. Sir, is the increase in realization in BOPP an India phenomena, or is it something that's happening across the globe?
So it's across the globe, in fact. So India, of course, may be little higher compared to a global average. But yes, increased demand we witnessed in exports as well, not only in India.
Okay. And so is there a possibility that some of your customers start importing BOPP instead of purchasing from you, given the fact that India prices have increased much more significantly compared to what's happened globally?
Not actually. If you look at the history of import happened in India, even at the peak level of margins also, that has been very insignificant, maybe 1% or so. And there's a basic reason behind this. I mean, unlike many other industries where you get the advantage of high volume production, low cost of production, this is not the industry where the cost of production differ much, whether you make in India or China or other part of the world. And history also suggests so import has been negligible. So we do not feel, frankly, import will start in India. On the top of it, there is a 10% import duty as well on import of any kind of flexible packaging in India.
Got it. And so my final question is, historically the increase and decrease in spread has been more driven by supply than by demand. So we just wanted to understand, what has changed this time around, because of which the demand has surged significantly, resulting in an increase in realization and spread. Has there been a new, use case for the product which wasn't there before?
I think I would say it's more a function of both demand and supply, not only on the supply side. So there are quarters when the demand levels are high. So of course, this quarter has been one, and we expect this momentum to continue in current financial year. But I would say it's more about demand and supply. Unfortunately, for flexible packaging, demand side has been growing year on year at close to 10% if you look at the last 2 decades history. This industry grows, although large part of the industry supplies to FMCG, but the industry So flexible packaging grows better than the growth of the FMCG because many applications are getting moved to flexible packaging from the other form of the packaging. So that way we feel demand should continue to grow. On the supply, of course, it's more to do with the timing. As if, supply comes within the short time gap to each other, there will be 1 or 2 quarter margin pressure. But ultimately, with the growth of the demand, it optimizes.
Got it. So thank you so much.
Thank you. The next question is from the line of Rohan from Total Capital. Please go ahead.
Hello, sir. Sir, I just wanted to understand.
So can you speak a little louder, sir?
Yeah, just a second. Am I audible right now?
Yeah, sir.
Yeah. So I just wanted to know that the momentum that we have been witnessing since last 2 quarters in BOPP, do you expect this to continue from year on?
Yes. So, as we said at the beginning of the call, yes, for the FY25, we expect this momentum to continue. For specialty, we expect this uptick to little increase, and BOPP margin momentum we expect to continue.
Okay. And can you just give us an idea regarding how the things are working in BOPET? Because you were a little bit having a negative that it's not, journey will be difficult for next 18 months. So has anything changed in BOPET?
So just demand level has increased. So if you recall, there has been a lot of capacity addition on the BOPET side in FY23 and FY24. And with the little increase in the demand level, the gap is getting partially breached. Still, the gap is not fully breached. But little increase in the demand level is helping to optimize the margins. So that's why probably for the first quarter, we also earned positive EBITDA on the BOPET line.
Yeah, and do you think that going forward, it will be, better than what it was previously for us? Do you think it will sustain?
So from all logic, yes. Answer is yes, because demand is increasing. There is no substantial capacity addition we expect in FY25. So that way, yes, from logic perspective, it should increase.
Okay. Yeah. Thank you. That was from us.
Thank you. The next question is from the line of Jatin from S1 Investment. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. So just wanted to understand, because in the last conference during the mid-May, we were indicating that margins are likely to remain soft when we compare to the last quarter, and BOPET was still continue to make losses. But however, scenario has changed starting June, which was in the last month itself. So what could be the reason that has driven such an improvement in the spreads in both the segments, BOPP and BOPET?
Yeah, multiple things have happened. One is that this year the summer was very harsh. So the consumption of soap, shampoo, drinks have gone up significantly. Also, there was election season, and that has also changed. What we are also seeing is Europe and America has started to recover, and therefore the export in general has gone up from the country.
So if you want to look into demand supply in the domestic market, so can you help us? What was the situation last year, and how is the demand supply panning out right now?
So as far as BOPP is concerned, it's fairly balanced. When it comes to polyester, we still see some excess, and that is the reason that polyester margins are still not at the desired level. But the good thing is that last year at the EBITDA level, polyester was making losses, while in the last quarter there is a marginal EBITDA that we have earned. What we feel is that in the quarters to come, the EBITDA margins on polyester film will go up. However, what you have to understand is, we have done sizable investment of 400 crores in polyester, and we need to earn a minimum 100 crores of cash to, recover that investment. So the business had not reached to that level. So obviously polyester will take some time but it's a matter of time before even polyester starts making money. The other thing is that we're continuously shifting our polyester volumes also to specialty, and we've already reached a run rate of close to 500 tons per month. So roughly 20% of our capacities have been now locked into specialty. As we keep moving along, and we have come out with two very innovative films. We cannot share too much details in the call at this stage. Once we start scaling up polyester, irrespective of the market conditions, in next couple of years, we'll start making quite decent money. Just like BOPP also, we make money in tough market.
So probably one can look that it's a matter of 3 to 6 months or probably another 9 months where the polyester will also start making equal money or more money than BOPP right now, right?
I would not like to compare it like this, but for sure, BOPET better days are here to come. And, after this, right now, only 2 lines are coming up only in FY27. So actually, for next 2-3 years, there is hardly any capacity coming up. And demand will continue to grow, and therefore, BOPET will see better days.
Okay, sir. And sir, now when we are seeing that we will be moving into a value-added products, and we have developed a couple of more products, and even SCF likely to come in Q4 or FY25. But till the time SCF comes on the commercial production, the run rate that we had mentioned, and even Mr. Pankaj Poddar had indicated on the news channel that the 2Q numbers seems to be look more promising given the improvement in the spreads. So is it fair to assume that the 19 rupee kg that we have done in BOPP in 1Q, the second quarter and the third quarter, the numbers will be upwards of 25-26 rupees a kg?
I wish I am God.
So, but this is an indication that there is an improvement in the profitability, and there was a TV interview of Mr. Poddar that's indicating that the Q2 will be much better in terms of the Q1 forthcoming quarter.
Going up. There's no doubt about that.
Mm-hmm. Sure, sir. That's all from my side. Thank you.
Thank you. The next question is from the line of Aditya Rathi from Equitas Investment. Please go ahead.
Thank you. My questions have been answered.
Okay. Thank you. The next question is from the line of Navneet Bhaiya from an individual investor. Please go ahead.
Hi, Pankaj. Hi, Neeraj. Congrats for a good set of numbers. My question is on Wrigley. So I saw your interview, Pankaj, where you mentioned that you're looking to consolidate your operations in Wrigley. When I look at your segmental performance, on a quarter-on-quarter basis, the turnover seems to have declined from about 8.5 crores to 6 crores. So I just wanted to understand how do we see that going forward?
See, the turnover has not declined as much as perhaps you're saying, but it has certainly declined. The decline has happened because earlier online we were more aggressive, specifically on marketplace, and we realized that's not helping us, so we have kind of cut down. The good news is that, the retail is going up month on month, and online also, we are looking at more logically to try and sell only profitable products. So the losses per month has come down by close to 1.25 crores, while there's a marginal dip in sales, and that too we feel that in a month or so, or 2 months, we should be able to largely recover on the sales part, because now all the segments are going fairly well. What is good thing is that now, the marketplace is making money for us, and retail, if we are able to continue growing from here, it's a matter of time where retail will also make money. In fact, services are already, even if we allocate proper cost to it, we are almost close to break-even when it comes to giving services at the retail. The only area which is right now still have to be turned profitable is one is product sale at the retail side and our own websites. On the website side also, we are going to come out with a new version of the website by December time frame. And we have come out with some very innovative ideas in terms of how we can keep the customers tuned to our website. I cannot share too many details at this stage, but what will come out will be very innovative. And, the other thing is that we are now launching a lot of private labels and signature range, where the margins are much better, and these products are really loved by the customer. In fact, I've personally recorded one podcast which is there on LinkedIn and YouTube and, Insta. You may like to see my recent podcast, which will give you a lot of clarity in terms of what we are doing.
Okay, appreciate that. I will definitely have a look. So what's your GMV for the last quarter in Zigli?
It's close to 4 CR. Quarter-wise, it may be slightly lower. June run rate is close to 4 CR. I think quarter-wise, because April, May, we had quite a dip on the marketplace sale. So at a quarter level, we may be at 3.5 perhaps.
Okay, so about 10 odd crores for the quarter.
Yeah.
10 to 11. Okay, and as regards to your comments on, the losses being controlled, again, in your, segmental results, we have lost about 10 odd crores, 10.3 crores to be precise, in your others vertical, where I presume Zigli would be housed. It was a similar number in the last quarter. So is there something else in this as well, or how do we see this going forward, the minus 10 crore number that's there in your segmental results?
So others include, besides Zigli as well, like the rigid packaging. So that way you may not be able to connect the numbers.
Okay, so these new verticals that you've launched, rigid packaging and others, they would currently be on a ramp-up phase and hence there are losses. Am I understanding that correctly then?
Exactly, but the good news is that, rigid packaging is also growing close to 10% month over month. We did June month, we did 3 crores. July, we have already done more than 10% growth, and August again we are looking at a good healthy growth. So rigid business is growing. Zigli also, we have done a lot of structural correction. And as Neeraj mentioned earlier, that chemicals also this year we're expecting a double-digit numbers, EBITDA numbers in chemical business. So good thing is
chemicals, the improvement is quite visible. It's quite visible. I think you did 45 odd crores this quarter versus 25 crores the previous year. And of course, you had a 15 odd % EBIT margin. The others segment, it appeared as if your turnover is declining quarter on quarter, whereas the losses are remaining same. So I was just trying to match that with your commentary on trying to consolidate the Zigli as well as growing the rigid packaging. When do we see that appearing in your other segmental information?
So we are hoping that, the rigid packaging should be kind of break even by the end of this year. We should the number there to be break even. Zigli is going to take some more time, and especially till the time you keep investing in more stores. It may not be that easily profitable unless we kind of take little pause to the growth of the business. Then only you start seeing profitability, which is I think still at least couple of years away, if not more. But good thing is that Zigli is moving very well, and what we feel is that even if we touch 100 crores of net revenue, our losses would not be that high. So we are running it very, very logically and rational manner rather than just try to burn money and take sales. Focus is to build a brand, that is, and in a rational manner.
Understood. Thank you so much, and all the best for your future quarters.
Thank you. The next question is from the line of Nishant